Well, hello YouTube subscribers. Thank you so much for joining me. Sean Allison here, ready for this week's update. Money, I can only gain or lose, but time, I can only lose, so I must spend it carefully. We know with the increase of prices all around the globe and all different services and commodities and the whole range of things, right? We've got real estate that's at 10-year highs. We've got, and beyond, we've got food that's moving up the fastest it has in over a decade. Steel prices moving up 300%, lumber 171%, soybeans, corn, used cars have moved up dramatically. It's becoming very, very expensive. It's taking longer hours to pay for the same amount of food and goods and services we used to consume because everything is moving up more rapidly than what people are making money. So we have to learn to make money more rapidly and develop different skill sets. Now, this week, not as much economic news going on. We've got a little bit international trade in goods and services, petroleum status report on Wednesday, jobless claims and the employment situation Thursday and Friday. We'll keep an eye on those, but not as significant as far as news goes like we've seen in the last couple of weeks. So we'll keep an eye on that. But right now, the futures market, which shows us where the cash market will open, let's have a look. Refresh it. Very flat, not really telling us anything at all. Let's go and have a look at the actual charts so we can see. That is not the charts. Here's the charts right there. All right, so right now we can see that we are in an opening range neutral mode. So this green candle here was the first trading day of the month. The high was 4375.19. If it gets above that, we're bullish in the market. We're looking for things to go higher. If we're below 4288.52, we're likely to move lower, at least down to this 200, more than likely. So we're in neutral mode right now. We don't have clear direction in the market, and we have to make sure we're very conservative in our trades and our trade management as a result. All right, so fairly weak overall. You can see here, we look at the overall market. You can see the Russell 2000 still very much range bound in a trading range. NASDAQ starting to break down well below the 21. Same with the S&P 500. Same with the Dow Jones Industrial Average. And also the transports are below their 200. So nothing particularly strong with what's going on over there with the workspace and the overall market. We look at the sectors, same sort of thing, right? The largest sector in the market, technology, well below its 21, selling off. Healthcare selling off. We've seen utilities moving down. Consumer staples moving down. We're starting to see a breakdown in biotech. Energy's been doing very well, obviously, with the European crisis over there. We've got people in the UK that simply can't get fuel, and this is something that is causing some issues over there, no doubt about it. More than 2,000 British gas stations, should I say, were still dry on Thursday due to shortage of truck drivers, which was starting to disrupt deliveries to pharmacies, while farmers warned a lack of butchers could lead to a massive cull of pigs. So certainly causing some problems over there in the UK. We've got a whole range of things going on around the world that these supply chains are being disrupted, and rampant inflation. It's everywhere. We're seeing it, and really we've got to understand, with this inflation and the money printing, this whole financial system is stacked against us. So we have to be able to make money at a faster rate than what they're printing it in order to get ahead, and we have to be able to do it in record time and do it in a very conservative manner and protect our downside at all times. And that's what we're doing, and we're making some exceptional returns. I've showed you guys some trades that we've done recently. One of them was, you guys will remember me talking about this last week, calling it in real time. None of this hindsight trading, calling it as it happened, LNG. Look at that move. Boom. Thank you very much. That resulted in, my friends, a 39.4% return in a week. In a week on that trade. That was a call debit spread on LNG. It has moved up very nicely. It was $96.01 when we got in. Right now, it is trading at $102.30. So that was a great trade. And what I would say is just close that out. Take a 39.4% return in a week. Nothing wrong with that return. and simply move on to something else. A great trade there from last week, closing that out for a big winner. Now, I had a couple of new trades here. One of them was on CPRT. I'll just show that to you. CPRT. Now, CPRT was starting to break down here below the 50, below the 21, looking to move down here. Could easily move down to the 200. What I'm going to do is set up a put debit spread. I'm going to sell the 135, buy the 140, and I can do that, as you can see here, for a limit debit of $280 for one spread. I could potentially make $220 for one spread in profit, or a 79% return. I'd set my stop at 140, okay? So I'm only risking $140 for a potential profit of 220. So that's a bearish trade there. Neutral market, not sure whether the market's going to move higher or break down. It could very easily do that. It's already starting to. So we're going to keep a close eye on that. We've got a bearish trade right there. Now, the only other trade we've got on here is McDonald's. Now, looking for McDonald's to move above 250. Right now it's 243 and 8 cents as of today. We want it to get above 250, so we're going to sell the 250, buy the 240. Now, Sean, how would you set a trade like that up? Let me show you. Some people are asking me about this via email. The email is support@cashflowoptions.com.au. Now, let's just type that in, which is McDonald's. Okay, you type McDonald's in there, Stock Smart. This is how you do it in Interactive Brokers anyway. I'll just show you the basic trade. So we're looking to do this for the 19th of November expiry. Okay, so we're going to do this for the 19th of November expiry, which is right here. I'm going to sell. So I go to the bid side because I'm going to sell. I'm going to click here on Strategy Builder. Okay, and I'm going to expand that so I can see it clearly. Now, let's just bring that up. Okay, so I want to sell. Now, you got to make sure that this is the 19th. There it is, right? The 19th of November, 45 days from now. We're going to sell the 250. Okay. There it is there. Just get rid of that first one. Not sure what that's from. And we're going to buy the 240. Okay, so you go to the ask side. So that gives us a bid of 475, an ask of 515. In between those two would be 495. Like that. You then submit and place the order, and you are done. That is a call vertical debit spread. Looking for it to do what, Sean? Move from $243.08 to get above 250, where we sold the call option. If it does that, we'll make a very nice return here on the amount of money we're outlaying. With our stop of 295, we're only risking $200 a contract, or for one spread, and our potential upside is 515. So a 2.6% reward to 1 as our risk. Okay, so we're happy with that. So that's another trade there. There was one there that I spoke about with CPRT. We had a winning trade there on LNG, which I demonstrated to you all in real time. And the week before that, I demonstrated Tesla in real time, and we had a 38% return in 2 weeks. So a couple of great winning trades that I demonstrated to you guys in real time there. Looking good. Now, as far as our longer term trades go, right there. Now, Palantir right now has had a bit of a move down. So what we're going to do is we have our insurance policy here at the 23 strike put option. So we've got our insurance policy that we bought for $14 a contract, the 23 strike put. With the stock moving down, in fact, let's just have a look at the stock. It's probably a smart move. So if we come here, PLTR. Okay, and you can see there it has started to really break down here. So we've got protection at 23, right? We've got the 23 put option as an insurance policy for the shares that we've owned. Again, this is long term. We bought it for $14 a contract. It's now worth $82 a contract. Now, because the market is in neutral zone, I don't want to sell it. I could sell it for a nice profit right now and reduce my break even further, but we could sell off in the market very easily. I don't know. No one really knows. So we're at a bit of a turning point right now when our opening range isn't giving us any guidance. Hold the insurance. Just hold it, okay? So what I'll do is I'll buy back the 30 call that I sold in October, the 15th of October, it's only worth $4 a contract. I'll buy that back and I'll sell the same strike, 30 strike call for the 19th of the 11th expiry for $34 a contract. My new break even then, add back the cost of the call that we're buying, subtract the new call premium for selling the 30 strike call for the 19th of November expiry. Our new break even is $27.54. So that's how I would manage that. I'm also going to add to this position by selling a cash secured put option at the 30 strike level. So right now stock is at $23.17. I can sell the 20 strike put for $66 a contract or a 3.3% return. Two things can happen. It can be above 20 or below 20 come the 19th of November. If it's above 20, I keep the $66 a contract and I don't have to buy the shares. If it's below 20, I still keep the $66 a contract in profit. And I now, not APPS, I now will buy the PLTR shares at $20 with a cost basis of $19.34, taking into account the $66 I get for selling the put. So I'm doing that as well. Okay, so that's what I'm doing there with that one. Now, as far as our snap trade goes, I am rolling down the 82 strike call. I'm going to buy that back for $29 a contract. I sold it for $251, so I've already made a nice profit on this. And I'm going to roll it down to the 80 strike call for the November contract, bringing in $3.20. So that's going to reduce our break even down further from 78.13. Add back the cost to buy back the call, minus the new call we're selling, $75.22. So we're reducing our break even by almost $3 there by doing that. So that's a nice trade. We're happy with that. And then the last one that I showed some members here was a cash secured put option that I sold on Tesla. Tesla, the price was $781. Well, this is what it is now, right? It's $781.53. When I entered this yesterday, though, it was $775.27. Okay. So what I did is I sold the $695 put option, cash secured put option. Now, obviously, Tesla's a lot more expensive, right? To sell one cash secured put option, which means you've got the money in the account to buy the stock if you have to, we would need $69,500. Okay, so this isn't for everyone, obviously. So this one is below the 200-day moving average. That has acted as a support level, as you can see. I've actually sold a cash secured put option below that 200-day simple moving average. What this means is I'm happy to own it at $695, but I'm not happy to own it at $781. Okay, so I'll own it for a good $90 less, but I won't own it there. For the privilege of you selling it to me at $695, and you can only do that if it finishes below $695 come expiry, below the 200-day moving average, then I will buy it for a cost basis of $683.16. The price at which I'm selling the put option minus the premium I'm getting for selling it, right? And this is only for 10 days, mind you, for 10 days. I bring in $1,184 or a 1.7% return in 10 days. Very conservative. If it finishes above $697, I keep the $1,184 and I don't have to buy the stock. End of transaction. If it finishes below $695, I will still keep the $1,184 and I will then buy the stock at $695 with a cost basis of $683.16. Okay, so that's another one that we're doing there as well. All right, my friends, a little bit exhausted. I woke up very early, did a presentation to London today, to some members in London, so a bit tired today, but we got through it, and that is what we're looking at right now, neutral zone in the market. So let's see what the market gives us this week, and if we can start to get a clear direction. If we start to break down, the 200 is very much on the cards. If we break that, then we are moving down in a big way. So we will see. We will see what happens here, and we will keep an eye on that. Trade what you see and not what you think. No one knows what's going to happen next. Let the market tell you. You're not in charge. Neither am I. The market is telling us what to do. We're simply reacting to it. We're in tune with what the market's telling us. As a result, we let the market do what it does, and we just respond, not react, respond accordingly. So that's what's going on. I hope you guys enjoyed that. We're managing our trades. We've had 2 great winning trades there on Tesla and LNG in the last couple of weeks, doing really, really well. And all of our other trades are looking really good also. So massive amount of winners we've had with our members over the last several months. Just incredible win streak. We know that we can't keep winning all the time, right? There will be some losses there at some point, but for now we're enjoying the run, and we'll continue to make money like we do. All right, my friends, we will talk to you again next week. Now, as far as the money wheel strategy, I had overwhelming support for, yes, Sean, please create the money wheel strategy program, right, where I sell the cash secured put, then when I own the stock, I sell calls to get out, sell puts to get in, then sell calls to get out when I own the stock. It's a fantastic strategy. Used it for decades. And I will put something together, right? Not straight away. Give me a little bit of time. Got a lot of things on right now, but I will put something together, and it will be world class. You guys will love it when I do it. So yeah, thank you for the feedback. And if you do have any feedback, send it to support@cashflowoptions with an S, cashflowoptions, all one word, .com.au. We read every single email. Don't worry about that. And thank you so much for your support and your feedback from last week. Really inspiring. And also your thoughts on the new Money Wheel program. We will put that together, no doubt. All right, my friends, we'll talk to you again next week. My name's Sean Allison. All the best, and bye for now.